Welcome to Momentum Monday.
Hi, Ben.
Howard, how are you?
Your background never changes, and I'm in a different place every week.
Yes, some of us need to work, right?
I thought I was the one. No, I'm the one hustling.
You are? They don't know.
All right, so behind me is headquarters of Google. I'm at an Airbnb. My wife, your family week in Dublin. I'm at the Money Conference, which is a big banking, crypto, fintech conference in Dublin for the week. So welcome, everybody. And today, like always, sponsored by MarketSmith. Thank you, IBD and MarketSmith, for providing us with the charts and data. So, Ivan, let's get right to this week. I wanted to start, got a bunch of charts, but I wanted to take a look at a couple that I sent you earlier.
All right, let me just share my screen real quick, and then we go. All right. Okay, let's start with your charts, which are right here.
Couple interesting ones. That was at the moment. Can you pull back that momentum?
Yeah, I don't know why it disappeared. Let's find it real quick.
Wow, look how many followers I have. Woohoo!
Probably 80% are robots, right?
Funny.
Let's see. I think you retweeted it. Oh, yeah, here we go. All right.
Those are people seeing my face or the chart, do you think?
They should be only seeing my screen. No, not your face, unfortunately.
You can see that this is a world dominated right now by momentum. This is rare moment. So as much as I'm bullish on momentum, I think you have to have some kind of perspective of how good it is right now for this strategy of, buying what's working. We could have all kinds of discussions about what is momentum, but really it's just what's worked in the past should continue to work in the future. Higher prices lead to higher prices. And we can see since 08, the bottom in March 09, when it really started getting interesting in June 2009, and then right through 2010 was an opportunity to get long FANG and all these growth stocks that are now in pure momentum mode. And this kind of 50-60% outperformance over value is not, it's been fun, but this will not last forever, and it will be painful when it ends. So just put some perspective in this. This show's Momentum Monday, and we're going to look at stuff that's working, but it won't always work, and it just feels like on borrowed time in this cycle. So, Ivan, what was the next chart I was going to show you, which was a pretty interesting one from Charlie.
Yeah.
So he was posing the question, I guess Amazon's PE, 5 years ago was 300. Now it's like 2,000. So, would you rather have owned the lowest PE stocks for the next 5 years or the highest PE stocks? I think it was a really good, kind of comment on momentum. And
it depends. I mean, how did the same two groups performed in the past year? Like we need to see how they perform each year.
I'm saying the highest PE stocks today, would you rather own those, out 5 years, including ABM? I mean, people haven't even heard of some of these companies. Obviously, we've heard of MasterCard and the CME Group and VeriSign and NVIDIA. But, Netflix, Facebook, there's 10 companies there I've never even heard of, the highest PE ratios. And then there's, 80% of the companies on the lowest PE ratios I've heard of, right? And so I think in demographic, if you ask people that watch over 60 that watch CNN and Fox, they would choose. What's that?
I was going to ask something, but I'll let you finish.
The older people would choose the right side, and you would a lot of these people that are part of this momentum boom who choose the left side. So it'll be interesting if you could study this on a daily basis. I mean, that's what that study, the first chart was, is that, you know, for the last 7-8 years, momentum has outperformed. So go ahead, Ivan, sorry.
So the stocks on the left side, the high PE stocks, they also come with a lot higher earnings. It is normal for a stock that is growing 50 to 200% a quarter to trade at a lot higher PE. Just the higher PE reflects the higher market expectations about the future. And if you ask me which group,
absolutely, but also the PE, so it's still trading at a much higher earnings ratio, even though they may be growing faster than the companies on the right. But I think this just goes to the first chart. It's like momentum's working, and it's working because this bull market's going on longer and longer. People are getting more comfortable owning these, you know, high PE names, and at some point, you know, over the next 6 to 12 months, I do expect some kind of vicious correction. I just have no idea. There's no signs of it happening right now. The market's shaking up.
In a bear market, obviously the right column will outperform. And by outperform, I mean it will only go down 20, 25%, while the left column will go down, you know, 50 to 80%.
Yep.
But in a bull market, the left column has the potential to go up 3, 4, 5 times in a period of 3 to 5 years. Well, as we can see, the right column is just treading water.
I love a lot of these companies. You know, I was talking about Illumina a couple of weeks ago on the show, and that stock's up like, I don't know, 10, 12%. One I wanted to get into, because I'm going to sell some down, is Visa. I haven't talked about these in a while, but if we can go to some charts.
All right, let's go to the charts. Can you see the market screen? Okay, great. So what do you want to talk about? Let's start with the Nasdaq 100, which is setting up near all-time high.
The FANG stocks are going. I wanted to spend some time on those, but first I wanted to talk about some financial ones I have. So let's go to Visa. Selling some down today, even though it's breaking out for the billionth time. It just feels really extended. Been riding it forever, so I'm taking some money off. You know, sell when you can, not when you have to. Same with MasterCard. It's just, you know, I'd like to take some profits along the way, and these two names feel like anti-momentum in the sense of selling some. Well, they're working, but they just feel like they're extended from moving averages for me relative to their past, but definitely, you know, look how simple these businesses are. In the era of Bitcoin, and Bitcoin's correcting, you've got Visa and MasterCard, which are simple payment businesses, and continue to just perform fantastic. So let's go now back to Nasdaq, Ivan. Pretty flawless. You know, it's just, you know, really, you know, kind of been basing here for 6-7 months. And the Nasdaq 100 looks ready to go again. Higher. Yeah. What are you seeing here?
I mean, I wouldn't be surprised if in the next couple months, since it's the summer, if it kind of goes sideways, and then from there it break out in August, September. But you know, anything can happen. Obviously, definitely.
Technically, yeah, just strong.
It's looking very strong and constructive. The only thing that concerns me just a little bit is that in the past month or so, we saw so many recent IPOs from China that doubled and tripled. So there is a little bit of too much excitement in the market, and many momentum stocks are extended for fresh entries unless you're a very nimble short-term trader. Mm-hmm. They don't really offer that great opportunity. But bull markets correct through market sector rotations. And we're seeing it even today as the tech sector today underperformed. We saw the transportation stocks breaking out. So anytime
look at FedEx. Was FedEx breaking out today?
Yeah.
Yeah, looks strong. Yeah, it's just a lot of money flowing into the U.S. You got strong dollar right now. You have weak Europe. You know, even FANG looks. Listen, if you're only going to earn 2% interest on an Italian bond, and you can own Microsoft, pull up Microsoft, yielding. What are they yielding? Probably more than 2%.
Yeah, they usually pay about 2 to 3% dividend. I don't see it here for some reason.
Ex-dividend yield 1.7% right there, just to the left of it. So this is Market Smith's charts. They're phenomenal. They've got all this built into the chart. So you can earn the same as an Italian, I don't know, 2 to 10 year bond. Obviously, you're taking, I think, less risk owning Microsoft than you are owning an Italian bond. That's just how screwed up the you know, this money supply is, that they're forcing it into Italian bonds. And this is why FANG stocks continue to do well. I mean, it's that arbitrage play of risk. And to tell you, Microsoft looks a lot less risky than the Italian bonds. And you can see that with all the FANG stocks. I think the only thing sitting in front of, you know, Amazon, Microsoft, Facebook, is a revolt against big tech, right? I'm here in Dublin. Google's, you know, buying up real estate here. They're not paying taxes. You know, they don't have to employ millions of people here in Dublin, but, you know, they've just renting an Airbnb here across the road from Dublin's headquarters. The prices to live in Dublin, you know, it's crazy. 3,000-4,000 a month for an apartment. You know, there's the same issue as San Francisco in the sense there's just not enough housing. Now with Brexit, you have all the banks opening up here in Dublin as well. So there's just so many cranes that I'm seeing in Dublin. But, you know, with the amount of data these 4 companies have, the FANG companies, you know, there's going to be a revolt at some point, the way they're behaving. And, you know, the rhetoric and the nationalism. So again, listen, if you've had a great run, there's no harm in taking a little bit of money off the table. So let's get to your list, Ivan, and see what looks interesting.
Can you see the marketwisdom.com? Yeah, okay. So we see Alibaba is still number 1, just like last week. We continue to see a lot of tech, a lot of software, and robots. ISRG is also near no all-time highs and setting up again. There's the occasional financial. Green Dot Corporation has been slowly.
I haven't followed it. I bet you the stock's done well.
Yes, let's pull it up real quick.
Brand new on the week old, up 6%. Oh my goodness.
It's been doing well for a while, and it has the earnings growth to back up that price appreciation, and it recently broke out again. If you're a swing trader, you know that move here was a good entry.
Yeah, relative strength 93. I mean, nothing wrong here other than it's just had an incredible run. Would have been nice to see. Yeah, Baba's holding above this 200.
Just broke out above 200, and then last week it pulled back, and then now 200 acts as support.
Yeah,
and from here we'll see if it will be able to make higher highs, higher lows. Twitter,
Twitter we love. Continues to just do what it should do. You know, just basically at all-time highs, right? There's nobody left, as we said last week and the week before. There's nobody left from, including employees. You know, Ev, co-founder, was selling. Chris Sacca, they were all selling. Everybody's out of this stock. So to me, this is like all-time highs. Now there's envy. You know, all the people that were in this early that loved it are pissed. And this is what happens. You know, the company is the same product. It's the same as it always was, you know, same problems it always has. And, you know, it won't let anybody back in, and then it gets added to the S&P last week. So congrats to the longs. Let's keep going.
Maybe the market has run out of stocks, you know, to buy.
It's not that. It's Twitter is a brand that's, you know, you're talking about, you know, 30-year-old males that are into sports and into finance. It's going to be hard to replace these, you know, and into free and getting news. It's going to be hard to replace that. Just, you know, I was talking to people about Facebook and Apple. If you're a 35-year-old middle class woman, even 30-year-old middle class with kids, you know, Apple and Facebook have, at least in North America, a lockdown for the next 30, 40 years. The way I watch, you know, my wife interact with Facebook and the Apple store, it's going to be very hard to replace those two products for 50, you know, for 30% of the population, no matter what they do. So Twitter, what else from your list?
As I mentioned, ISRG, it is setting up again. I mean, it's been on a
the other robot stock. The other robot stocks are AVAV and AVAV, which is drones, setting up.
There's another one, Maser Robotics.
Yeah, MSOR Robotics. Even iRobot, I've noticed today, has had a big move. I mean, it's my least. It used to be my favorite robot stock, and then it's just, as soon as SoftBank invested there at the peak in June of last year, you know, relative strength 23. It's really kind of been the laggard. It was the early leader, and then, you know, my play still for robots is Google. I just, you know, it's the ETF of ETFs for tech. You know, it's definitely underperformed the other FANG stocks, and the reason is the smartphone. You know, Google has Gmail and Android, but with Apple so dominant in North America, you know, they're just, search is not, it's not the desktop anymore. So Google's just more of a diversified tech company, but I still love it. But if you want to own robots and you're a little scared of the stocks we just brought up, Google's for you. All right, back to your list.
Okay, so there are three themes that I would like to highlight. One is that we've seen some major short squeezes in highly shorted stocks. And even today, after hours, we see something like Restoration Hardware is up another 20 points after hours. It's a very highly shorted stock. So anything that is highly shorted in the past month, it's been on an amazing run. Even Tesla is starting to squeeze the shorts slowly. Stocks like ROKU are setting up again. Let me show you a daily chart so you have a better perspective. These are all stocks with more than 20% of their float short. And as they rise, some of the short sellers are just forced to cover and to buy back their shares higher. So this has definitely been one of the major themes for the past few weeks. And the other one, in terms of hot price action, has been recent IPOs. I think we mentioned them in the past few weeks, but you know, the breakouts continue. There is a Chinese stock, which is basically the HMI, which is the Chinese Fitbit in a way.
Oh my God.
I highlighted it over the weekend. It broke out today. What's interesting is that they're actually making money, unlike Fitbit, and they're making decent amount of money on 3 times less sales than Fitbit. So either their accountant is a genius, or they just know how to run a business better than Fitbit.
Well, listen, the digital wall of China is interesting. You got to really be in the speculative mode for these to really work, because you have to believe, right? The Xiaomi is complete knockoff of iPhone. They are a competitor in China, and so you go cut that deal with Xiaomi and you pump the stock. But again, beautiful, nice call. That's interesting. Go back to the list. Let's just kind of scan through quickly.
Sure.
So Coupa Software, Wix, we talked about last week, had another good week. Shopify all-time high. So it's e-commerce software. I'm just trying to look for new names. Mongo, just a lot of enterprise software, Tableau software, Upland software, Cornerstone Demand. So HubSpot. So enterprise, your watch ideas worked, and obviously the Chinese company worked as well. Callaway was a great one. So that's how many weeks? That's 2 weeks on the list.
Yeah, it's a recent addition. That's very interesting name, that golf store, but it's been on a relentless uptrend. I mean, if you look at the macro statistics.
Listen, they've done a good job in a shrinking industry. Product's good, and I missed that. You know, a lot of my friends were telling me to get long Callaway under 10, and I didn't. Just I'm so bearish on golf. But you see, there's winner. It's not just tech. Although Callaway is kind of a tech company, they're a media marketing company around their products. All these products are the same. But the Callaway Chrome Ball was a great hit, and then their new driver, which I have.
This is not an uptrend powered only by tech. Retail has done an amazing job as well, and one of the reasons, as I said, is the relatively high short interest in the industry.
Restaurants look good too. So I mean, there's just a lot of good looking.
Yeah, the occasional restaurant stock is doing well. I mean, they're also just like retailers recovering. They were left for dead last year, and now this year they are just. It's easier to beat expectations when they're very low. And this year, restaurants and retailers are just beating expectations left and right. And appreciating, as I mentioned, Fossil is actually the best performing stock on the S&P 500 this year. They have tripled this year.
Yeah,
it's
sure.
A company that sells watches.
I don't believe, but again, obviously not going out of business. It could pull a Restoration Hardware. A Restoration Hardware RH, which you talked about, was written off 2 years ago. And Five Bagger. I remember getting shaken out of that. That was one of my favorite stocks in 14, 15, just because we were shopping there. And yeah, I just took my losses in the 70s. The stock went to 23. I'd be break even, and the market's bailing out a lot of bad ideas. That's a tough business, but Restoration Hardware's done a great turnaround. They've done a great concept with their bigger high-end retail stores, and luxury is working. Listen, the middle of the market's kind of screwed up, but you know, fast casual restaurants are making a comeback, and high-end retail is crushing. And Restoration Hardware is high-end retail, expensive furniture, but there's just a lot to choose from in terms of great stocks. So there's a little bit of something for everybody. I think that's where we live. One interesting chart that I shared earlier, I don't know if you have it, is that Bitcoin weed NASDAQ chart, because I think that really talks about. I shared it on my blog this morning, but if we can.
Let me pull up your blog real quick.
Yep. Scroll down. This chart's pretty interesting. I'm gonna sneeze. Hang on. Excuse me.
Bless you.
So I don't know if we can zoom in on that, Ivan.
Well, it's not working on your blog post because this is the way you uploaded the chart.
I got it from Todd Harrison. If you go to Twitter.
All right, just one sec.
Yeah, nice. Just keep scrolling. Come on.
Is this the chart?
No.
No? Okay. Fine.
He's been busy, Todd.
Yeah, he's been posting a lot.
He's a great writer.
This is one?
Yeah.
Yeah.
He's got a marijuana fund. So if you can see, he's been tracking this for a while because he's very bullish on marijuana. He got me into GWPH. But you can see here, he's been tracking this Bitcoin weed NASDAQ 100. And you can see how Bitcoin kind of in 2000, I can't see either myself, in 2000, what year was that, where Bitcoin was just relatively leading on that jihad higher? Yeah, right there.
It has to be last year. I mean,
last year. Okay. So took the leadership role, and now we have this massive divergence in risk. And these are three really high venture capital, high institutional risk areas when you talk about marijuana, the NASDAQ 100, and Bitcoin. And you can just see the massive divergence in how the NASDAQ is now leading. Marijuana has kind of come out of this 2-year bear market or digestion of gains. And now you can see Bitcoin breaking down. So it's pretty interesting. This is like the bleeding edge of venture capital and institutional tech money. And you can really just see what's happening. It's interesting how it really is a bear market for crypto. Could get much worse. But there's opportunity where people can, are trying to expect this market to collapse, but there's such a broad implementation of tech, including in the marijuana industry, as that industry matures a little bit. And you have Trump messing with Sessions and, basically could help the marijuana industry, right? Sessions was the only guy who hated marijuana, and Trump, despite him, may do something. We're going to look at GWPH. Yeah, I mean, look at that base. Like any dip, if you're a speculator and you want to get into weed, GWPH is, the setup that you want. What is it, 7-8 year base, very loose base between 30 and 140, and it's just sitting there on top of it. 5-year kind of base from 2013. So again, going back to that last chart, then from Todd, is one that I'm going to start tracking, right? So this market, although the bleeding edge is getting crushed in blockchain and crypto right now, weed and NASDAQ 100 are filling. I think you need all three all-C turned down before you run for the hills.
I mean,
go ahead.
Some people say that Bitcoin is digital gold and it's the new way to hedge. So I guess we might see Bitcoin rallying when we see a correction in the stock market.
Again, there's just so much money that these three are pretty interesting. And they're pretty global. NASDAQ 100 is pretty global. The marijuana industry now is becoming global, from South America to the United States. And crypto is very global. And very small relative. So, Bitcoin on its own is not going to hurt the market. But I think if you see all three of these, bleeding edges roll over, I think you'll see a good correction. I
think it's a good thing to see a divergence and to see them trade in different directions.
I think so. And I think marijuana is really, if you think I just think marijuana is, I'm not a connoisseur or understander of it, but I just think it's early days, especially around CBDs. If you can take the THC out of this, as Todd talks about, and use it for pain, and use it as a substitute for a lot of the drugs that the pharmaceuticals are pitching you. So that's Canopy. That's the Canadian finally that went public on the NASDAQ.
Yeah.
But it's been public in Canada for a while now. They've got a ticker on the S&P or the NASDAQ. That's another weed stock.
That's another one. Yeah.
So we'll keep an eye on those. But again, a lot of stuff working as we've been talking about. Oh, one last one to revisit, kind of a exciting one for us, MMYT, which is finally breaking out, which is our kind of our venture capital of India idea, which is taking a public stock and in an industry that we love, and even though it's overvalued and large market cap, kind of a play on an industry, on a country, and we can see it's kind of like the price line of, and we just think, it's not profitable. So you treat it like a venture capital. You're going to have 30-40% swings to the downside. And in venture capital, you can lose all your money. So this is a stock that I think is the brand for travel in digital travel in India. And it's starting to show some relative strength. And
very interesting, especially when you consider that the emerging markets as a whole have been struggling as of late. I mean, for example, if you look at Brazil last week, they had a 20% intraday pullback. Like, they don't even know that the world is in a bull market, looking at the price action in their market.
And that was great. And it's just kind of a reminder that you just gotta.
And here it's India. It's what, 20% below its recent 52-week highs. So this relative strength in
within the country too, but again, I mean, in a rollover, this will struggle. So I'm saying it's just nice to see in terms of what the context you just said it, Ivan. But you do have to be careful. It kind of hasn't run with the travel stocks of the U.S., but C-Trip in China also has struggled. CTRP.
Yeah, I mean, if MMYT is able to make new multi-year highs while the India is down 20%. This is a significant relative strength. I mean, they say that leaders break out to new 52-week highs before the indices. So if ever India recovers to new multi-year highs, I mean, MMYT might go up 50, 100% from there. You know, this is just pure speculation. It doesn't mean that it will happen, but just based on the technical action, there's definitely some serious money that have been accumulating. That's
my other e-commerce idea was Etsy that I shared on my Peloton for last month, and I just feel like it is relatively undervalued in an era of global e-commerce and in an era of craftsmanship and small vendors, kind of like a Shopify play. It's not cheap, but great management, turnaround, strong board. Obviously, I know some of the board members, but strong board and breaking out. Basically all-time highs. And it's a name that is well known, but institutionally just not traded that much. And I recommend it just because it's something that I recommended, but. It could play catch up. It could really play catch up. And I know it's come from like $9 in the last year. So this is what momentum does. It's not easy to buy stocks that are up 200-300%, but I think it has 25-30% downside and 100-200% upside. So
and this is why momentum is a contrarian approach, because it's so hard to buy a stock that has already doubled. And it's especially hard if you already sold it at lower prices, and then all of a sudden,
when you're buying it at 9, it was on its way to 0. So again, that's not what I do. The company has severely turned it around. It's e-commerce, so they have unhappy users every day, millions of users. So there's a lot of happy. When people get upset that I recommended this because they're unhappy Etsy shopper, it's not perfect, but global e-commerce is interesting, especially around the craft. Helping people set up their business. And we've seen that with Wix, we see it with Shopify, and I think Etsy has a long future.
Very pleasantly surprised that they're actually profitable.
Yeah.
And as you can see here on the left column.
A year and a half ago, New York Times did a piece, and the board it was time to get it profitable. They turned it into a business, and it's pretty good earnings growth and profitable. And I think once these e-commerce companies have profitability and get a taste of it, they can stay profitable for a very long time. Now it's just a matter of getting more people onto the machine, and the cost of running these machines keeps dropping, and feeding the machines is cheaper, and getting more people selling on the platform. I think Etsy just, again, like I said, 20-30% downside and hundreds of percent upside. So you'll take that trade. Okay, I'm going to end it there. Have a great week, Ivan. Thanks, Market Smith. And
thank you, Howard.
We'll see you next week.
Yep.
I'll be back stateside.
Good.